Hey there, my name is Joe. In this video, I'm gonna show you the 15 steps to buying a house. 1. Make sure you're ready. Sure, there's being financially ready to buy a house. But are you emotionally ready? Even if it's just going to be your starter home, you're making a big financial commitment and putting down some roots. You'll want to think about your other goals for the next few years. Are you buying with a partner, and if yes, are you on the same page when it comes to money? Is there any chance you'd need to relocate for work? Are you thinking of starting a family? These big picture questions can add to the pros, or cons, of whether this is the right time to buy a house. 2. Get your finances in order. Buying a house may be the biggest financial decision you'll ever make. So before you take the plunge, you want to be sure your finances are solid. Using a home affordability calculator can help you determine your budget by taking into account your income, debts, location, and down payment amount. You'll be able to see how your monthly mortgage payments might add up and how your finances could look as a homeowner. This can be important for keeping your ambitions down to earth. You might be able to qualify for a sizable mortgage, but that doesn't mean you actually want to commit that much of your budget to the house. 3. Make a plan for the down payment. When you've determined what you can afford, you can figure out how much you want to save for a down payment. Though 20% down payments used to be the norm, many homeowners opt to put down less. A smaller down payment requires less money up front, but it means you'll have to pay mortgage insurance, which typically increases your monthly payment. The type of home loan you use also impacts the minimum down payment required. If this is your first home or if you haven't owned a house in a while, you may also want to look into state first-time home buyer programs. Many offer financial help, including down payment assistance. And if you have a friend or family member who can afford it, you may also use gift money to increase your down payment. Rules about gift money vary by loan program. 4. Create a wish list. See, told you there'd be some fun steps. And coming up with a list of must-haves and nice-to-haves for your house is definitely one of them. Whether you're looking for a starter home or somewhere you can imagine living for years to come, there are lots of little details. But here are some of the bigger decisions you might make when drawing up your list. Detached house or an attached unit. If you're all about having a backyard, traditional single-family home is for you. But if you're in a more heavily populated area or you don't want to deal with all that maintenance, buying a condo or townhouse might be your best bet. In some cities, co-ops are also an option. They can be less expensive than a condo, but a bit harder to finance. 5. Find the right mortgage for you. The type of mortgage you use to buy a house affects what you'll need to qualify for the loan, including the required down payment amount, and how you'll pay it back. Choosing the right home loan can boost your chances of approval and may save you thousands in the long run. Before you decide which type of mortgage to pursue, it's important to learn the advantages and drawbacks of each one. Here are some of the main types of mortgages. A. Conventional loans. Conventional loans are mortgages that are not guaranteed by the federal government. They offer low minimum down payments but have more stringent qualifications. B. FHA loans. FHA loans are mortgages backed by the Federal Housing Administration. These are generally easier to qualify for than conventional loans, but have stricter requirements for mortgage insurance. C. VA loans. VA loans from the Department of Veterans Affairs are for active or former service members and eligible spouses. VA purchase loans allow you to make no down payment. D. Jumbo loans. Jumbo loans are mortgages for houses that are more expensive than standard lending limits. These usually require larger down payments and higher credit scores. E. Renovation loans. Renovation loans let you wrap the costs of home improvements into the total amount of the home loan. Especially when mortgage rates are low, this can be a way to borrow more money for repairs while paying less interest than you would with another type of home improvement loan, like a personal loan. 6. Get pre-approved for a mortgage. You know your home buying budget, and you've decided what type of home loan will work for you. Now it's time to start shopping for a mortgage lender. There are lots of lenders out there, including big brick and mortar banks with familiar names. online-only non-bank lenders, and smaller, local banks and credit unions that may offer more personalized service. When you're looking at lenders, determining that they offer the type of loan you want is the first step. If you've decided on an FHA loan and they aren't an FHA-approved lender, move on to the next one. But beyond that basic hurdle, you'll want to look at how their sample rates compare with today's mortgage rates. Find out what closing costs you'll be responsible for and compare mortgage origination fees. You'll likely find some of this info right on their websites. To get some numbers, you'll have to speak with a loan officer. Working with a lender to get pre-approved for a mortgage is an important step in accurately determining your budget. A mortgage pre-approval will give you real numbers since the lender will have detailed info about your finances. That includes a hard inquiry, which will show up on your credit report. The good news: if you apply with multiple lenders around the same time, it'll only count as one hard pull, and shopping around may help you find a lower rate. Seven. Find a real estate agent. You've got your pre-approval in hand and know what kind of house you're looking for, so let's find someone to help you look. The right real estate agent can make a huge difference throughout the process of buying a house. From knowing the ins and outs of the local market to providing moral support when the search feels endless to helping you negotiate with a seller. It's a good idea to interview at least 3 agents. Ask people you know who've recently bought a home whether they'd recommend their agent. There's just one hard and fast: don't use the real estate agent who's selling the home you're hoping to buy. You want your own agent who will advocate and negotiate on your behalf. The buyer's agent is generally paid a commission by the seller. However, you may sign a representation agreement with your real estate agent that may make you responsible for paying the commission if the seller doesn't. It's rare that the seller doesn't pay. It might come into play, for example, if you're buying a for sale by owner property. But you should still read the agreement carefully and verify who'll pay in your case. 8. Go shopping. Yes, this step merits an exclamation point. It's time to take scrolling through online real estate listings to the next level and actually see some homes in person. Make the most of your walkthrough, since you might only see a home once in person before you make an offer, especially in a hot market. Try not to be thrown off by other home shoppers or by the seller's agent, who may or may not be in attendance. Take photos with your phone to help jog your memory when you're deciding whether to make an offer. It might be easy to recall that charming breakfast nook or the extra bedroom that would make a perfect home office. But the aging appliances or decking that needs replacement could be out of sight, out of mind. Potential issues can affect the amount you offer or be things to bring up with a home inspector. 9. Make an offer. Found a home that's right for you? Now's the time to make an offer. Your real estate agent can be a tremendous resource here, providing you with comparable sales information and any intel about the sellers they might have gleaned from the seller's agent. You may also want help from a real estate attorney. In some states, a lawyer is required to be part of any real estate transaction. If the seller rejects your offer, you might make a counteroffer or walk away. It depends on why they turned you down. If the seller counters, talk it out with your agent to decide whether to accept or make your own counteroffer. It's during these negotiations that a buyer's agent really earns their keep. Offer accepted? Congrats! Now you've got just a few more steps to go. You'll also likely write your first check at this point. Earnest money is a deposit you'll make toward the purchase of the house. It usually goes into an escrow account, and when the sale goes through, most buyers use it as part of their cash to close. 10. Get a mortgage. You know the property you want to buy and how much you'll have to pay for it. Now you'll choose a lender to get a mortgage from. You can go with a lender that pre-approved you or start fresh with a different one. Even with an online first lender, you'll often work closely with a loan officer to complete the actual application. This is a paperwork-heavy process, so get ready to do a lot of uploading. Here's what you're likely to need. 1. W-2 forms from the past 2 years, possibly more, if you've changed employers. 2. Pay stubs from the past 30 to 60 days. 3. Proof of other sources of income, including documentation of any gift money. 4. Federal income tax returns from the past 2 years. 5. Recent bank statements, usually for the last couple of months. 6. Details on long-term debts like car or student loans. 7. ID and social security number. Once your mortgage application is complete, you'll go into underwriting. During this process, the lender makes a final decision on whether to give you the loan. It is basically making sure there's not anything about the deal that's just too risky. Underwriting includes digging deep into your finances, so you may need to come up with even more documents. The lender will also look at the home you've chosen via an appraisal and request a title search. 11. Get homeowners insurance. It might feel a little strange to take out an insurance policy on a home you don't actually own yet. But most lenders make securing homeowners insurance a condition of giving you a mortgage. You'll want enough coverage to fully replace the home, which might not be the same as your purchase price or the appraised value. And typically the policy should become effective on your closing date. 12. Schedule a home inspection. A basic home inspection can raise issues you might face down the road and point out any necessary repairs. This visual assessment covers all aspects of the house and its systems, from the foundation to the roof. If you have a particular concern, like mold or radon, you may want to get one of the more specialized types of home inspections in addition to a standard inspection. And if the home has features such as a pool, septic system or retaining walls, you may want to have these inspected as well. You should choose the home inspector and pay for the home inspection. If it uncovers problems that weren't included in the seller's disclosures, you may be able to negotiate with the seller. 13. Have the home appraised. The home appraisal is completely separate from the home inspection. While the home inspection is for your peace of mind, the appraisal is really for the lender, which doesn't want to lend you more money than the home is actually worth. An appraisal looks closely at the home you're buying and at comparable recently sold homes to determine the market value of the property. Your lender will choose the appraiser, but you'll pay for the appraisal. Even if you're buying a house with cash, you may want to consider hiring an appraiser yourself to be sure about your investment. 14. Negotiate any repairs or credits with the seller. Though some items, like prorating property taxes or WA fees, will already have been addressed in your offer letter, you may still have some items to negotiate before closing. Your ability to negotiate can hinge on what kind of market you're facing. In a strong seller's market, it can be difficult to get concessions, since the seller can simply go to their next offer. But if it's an issue that will come up with any buyer, for example, a necessary repair that will get flagged by any home inspector, you may still have leverage. And in a buyer's market, almost any aspect of the transaction can be negotiated, including having the seller pay some of your closing costs or loan points. 15. Close on your new home. You've finally made it to the last step. Getting familiar with the standard closing documents ahead of time can make the closing process less nerve-wracking. Your lender must provide you with the closing disclosure at least 3 days before the actual closing. You can compare it with your loan estimate to see whether and how any closing costs have changed. This will let you know how much total cash you'll need to close. On or close to closing day, you'll do a final walkthrough with your real estate agent. You'll probably be buzzing with excitement, but make sure to check that everything's as agreed upon. For example, that all the appliances that are supposed to be included in the sale are still there. It's been a whirlwind of emotion and seemingly endless paperwork. Not to mention that you may have just written the biggest check of your life, but now you're getting the keys to your new home. Congratulations, you did it. Thank you for watching. For more how to videos, subscribe to our channel and don't forget to smash the bell icon to get notified.